IFRS 18 presentation and disclosure in financial statements. This requires that all income and expenditure that are reported within the P&L must come under one of 5 categories. But the way that it's going to be tested at SBR is very much in an applied way. So you're going to have to be able to identify, you're going to have to be able to explain where in the P&L certain items of income and expenditure will be presented, will be categorized. And this short presentation is going to enable you to answer those questions. So first of all, we need to be aware of what those 5 classifications are. Operating, investing, financing, income tax, and discontinued operations. Those are the 5. But how we arrive at classifying the income and expenditure under one of those 5 umbrellas, under one of those 5 buckets, depends on the nature of the asset or liability or transaction from which they are derived. So, in other words, if you're dealing with a deferred tax liability, or you're dealing with a provision for a current liability for tax, then the corresponding expense is going to be shown in income taxes as an income tax. Let me demonstrate all 5. Now, the operating one is an exception because the operating classification isn't defined. It's a residue. In other words, if it's not investing, if it's not financing, if it's not income tax, if it's not discontinued, then by definition, it must be operating. So it's the dustbin. It's the residue. It's the default, if you like. So what goes in investing? I think it's common sense. What income and expenses would you classify as investing? Well, it's that income and expenses that have come from assets which are not operating, which has come from assets which are standalone, which has come from assets which generate an independent and individual income. What do I mean? What are the examples? Well, if you've got an investment in the associate, the income from the associate, the income from the joint venture, the share of profit, that is independent from the day-to-day revenue and activities of the business, as indeed would be any dividends you've got or interest you've got from financial assets, and would also you bring under this category any gains or expenses in relation to investment properties. Investing, you would expect the income and expenditure relating to investing. Financing, I hope you've got it by now. If it's debt, if it's loans, if it's leases, if you're unwinding the discount, if you've got an interest expense, then that's to be shown in financing because it's relating to the nature of the underlying transaction, the nature of the underlying asset or liabilities of borrowing. Tax is tax, we talked about. Discontinued operations is IFRS 5. If it is a discontinued operation, you represent it in that single line. Those are the 5 classifications. This is the question that we had at the beginning. How are you going to classify these income and expenses? And you classify them based on the nature of the asset, liability, or transaction from which they are derived. So foreign exchange differences at the individual company stage, ISA 21, go through the P&L. And they're not all going to be classified in the same 5, in the same umbrella, in the same bucket. Trade receivables, if you've got a foreign exchange difference because you've sold goods overseas, and you've got a monetary debtor, you've got a monetary item, that'll be retranslated at the closing rate. There will be an exchange difference if you've got an overseas debtor. Now, that doesn't relate to investing activities. That doesn't relate to financing activities. It doesn't relate to, investments or loans. It's certainly not to do with tax or discontinued. Therefore, an exchange difference on your debtors is, as you would expect, I think, operating. So it would go in at the top of the profit and loss account. All right. Whereas loans is financing. Loans is financing. Yeah, the exchange difference on the retranslation of the loan would be regarded as part of the interest expense. This is brilliant because IFRS 18 is going to give us consistency in the way that different companies allocate their expenses. They're going to do it in the same way, and that's going to enhance comparability and usefulness for companies. My name is Tom Clendon. I help students pass SPR.